Stock market analysis and projections. First, the important information. Make sure you read this slide. This tells you about our approach to analysis in the markets and about you using our information and the important aspect of trade ownership. You have to own your own trade. Don't make trades based on what we say. Make trades based on you using all of the information you have and making your own decisions. All right, we'll take a quick brief here on the markets. This has been an extremely volatile week, and the stock market until like 10 this morning had really what was the worst week in a couple of years. And there's been a time period in here where we've seen a real deterioration in the second, third tier of the market, a lot of negative breath. For a couple of weeks, the Dow going down like I think it was 11 days in a row or 12 days in a row. So it was a big declining period in here. And of course, today we get a big reversal. The big decline that we saw basically was in 2 hours. That was after the Fed on Wednesday came out and what really matched the expectations, the things that I told our members was that I thought the Fed wanted to get to a 1% decline in interest rates, which they now did, 50 basis points and then 25 and 25, and then probably would stop and want to take a look at things. And that's basically what they said. They took a few rate cuts out of 2025, and that disturbed the market also. And they're just indicating that they need to look at both sides of their mandate. And that was exactly what Powell said. And they're far less restrictive now than they were. I would even challenge whether they're restrictive at all, but some people would say that, a more normal rate is around 3.5%. Maybe they want to get there at some time, but it's not going to get there until the stock market has some extended period of decline when they start to get nervous or we get into what they really see is a recession with climbing unemployment situation. So that's what really got the market to start moving down. And of course, it was from insanely overpriced conditions. And it was just ready to have a move to the downside. And basically, I warned also a couple of weeks ago that even though this was favorable seasonality, I thought there was downside risk, and that was because there was so much massive gains in the mega caps that I thought people, being that you had 10 stocks that led this big upside gain, and then the other 490 stocks really languishing. I think at one point there was only about 18 of them that were above their 50-week moving average. I know I put something out on that recently. And so we had a big deterioration. That meant there were a lot of losing stocks out there. And it also meant that these big gains, they would nail some of those down in these mega caps and sell something else against it that they had losses on. And that would then bring the market to the downside. And I think that's what happened. Today, we got a pretty good indication that inflation is not that bad. The PCE came out and it was a little better than expected. And then we had this big problem with the debt ceiling and this bill that didn't pass and blew up. And now they're talking about passing something a lot more simpler so that we don't have a government shutdown. But as I said earlier in the show, I think we need to look at things very hard regarding all of this huge government spending. And I'm glad that they're looking at it. And if it shakes things up, so be it, because the markets would do that all on their own if the government didn't come in and make some changes. So the decline in here that we've seen did some damage in these markets. And I'm going to show you that in the S&P 500. And especially even in crypto, which I'm not planning on showing right now, but there were some big breakdowns in there in the short-term patterns. So I think crypto is also has some problems moving forward. The selling pre-market that we saw today, well, that reversed quickly, as I said, and that went from down about 60 something points in the S&Ps to up 110. So we had like 170 point reversal in the S&Ps, and that comes at a time when we were kind of expecting the market to stop moving to the downside. And you'll see that as I begin to share this analysis. However, we had expected that the stock market would move to another bull market peak in January. There are messages out there right now that are saying that's probably not going to happen. And that the rally that we get into January, which I think may have started today, though I wouldn't be surprised if it gave a lot of these gains up before it started to look a little better. I think that rally is going to fall short of the high we've already seen, and that means that when we start to move up in January, and I'll show you what that timing is, that's probably a time to be selling, because I don't think that we're going to see higher highs. Maybe not even till the second half, but I will share that with you in the big picture analysis that I do in just about a week or a little bit more. Stocks for the week, well, they were down well over 3%. Now they're down less than 2% right now. Bond market 30s lose about a point and a half as we see the 10-year yields move up about 11 basis points to 4.5%. They were higher, of course. Gold market down about $18 and the silver market down $1. Silver and gold, as I showed earlier in the show, really don't look good to me. So silver actually looks weaker and has a significant breakdown. Dollar super strong, but may actually be getting ready to peak as it gains about 1% on the week. And oil loses about $1.70. But based on the analysis that we've been showing, where we expected the low to come in the low 60s to mid 60s, it got down to about 66. Now the time is kind of ending on that, and it's starting to look a little better. So oil actually could be better. Let's look into the stock market right now. We'll look at multiple time frame analysis and projections. S&P 500, NASDAQ, Russell, weekly and daily. We'll look really quickly at those. We'll look at our heat map that Matt has already given you some peek at. And some really good stuff that we're going to take a look at here. So let's take a look. We will start out by looking at SPY. I set this up, SPY up first, because I actually wanted to show you this 2-hour chart that I think is pretty significant. Again, we have weekly, daily momentum right there. That's that area chart that you see, and a 2-hour chart here with all of the momentum overlaid on it. So you really get an idea of what the conditions are there. Let's take a look at this SPY. So we looked at the potential for a bigger decline here that didn't happen. This one at 6% right there is what made the Russell low. And then Russell got stronger, but then it got a lot weaker during that period. This is where that S&P low timing came right over there. And you can see in here, these rhythms in here look really pretty good. And then we got into this next rally. But you can see in here, looking at the reversal scout, momentum has stayed very strong looking at that. On the bottom in here is the disparity index. This grid that we're looking at right over here is Katie's favorite, so I'm using it right now. Mine looks a little different on the weekly chart. Doesn't have the disparity index, but I put that on there because Katie really likes it. So that's what she looks at. This is still, a bullish look when you look at that. Now, what happened is when I look at the daily chart right over here, this low right over there, which is this shifted low, DJV, you asked me a question about this, and this is the old timing right in here. But I really think that based on what's going on at the end of the year, you often get some shifting that's going on, that important low is right here. What gives me that idea? Well, this timing right in here and this reversal nails this timing right there. And that says to me, that's probably what has going on. Now, this cycle right over here, I actually want to show you all of these, because what you see in here as we're been moving up during this time period right over here, positive cycle, you can see positive cycle. What makes it positive? Well, it ended above where it started, made a higher peak, came down and ended above, made a higher peak, came down and ended above, made a higher peak, and now a lower low right over here. If this was the end of a major weekly cycle, I would say that makes sense. But we're in the middle of a cycle right there on the weekly. So that says to me that there is a high probability of a failure in here. Now, we have this massive swing in here where the S&P 500 moves up 170 points from its lows, or 17 points here on the SPY. Let's take a closer look in here. And there's that big reversal. I think based on this negative pattern in here, based on the fact that the slim ribbon PO, the slim ribbon gave up and is no longer positive momentum, that this is a failure area. Now, yes, it could continue up, and I think that it probably will. Probably get some pullback or chop around in here and then try to get up in here again. So this resistance is basically where it is right now, 595 at that 50% retracement. 61.8 is at 598.30. That would be a likely level for it to try to get up to in here into January. This is the 78.6 right there. If it got above 603, I'd start to think the market was okay. But I have a lot of doubts about that based on this failure and these patterns. And I believe that this area right in here between 595 and 598.30 in the SPY is the failure zone. And you can see we have it marked as a sell zone. It's a sell zone because it's resistance and because this is negative right over here. It will really give me a lot of confidence if this starts to chop around down over here and we start to see momentum go negative. Here's the momentum right in here, and you could see it is neutral. We're looking at the OBI right over here, which is still neutral right there. And we will look here at the 2 hour. Now, what did I do on the 2 hour here? I overlaid the weekly momentum up on the top, which is still positive. I overlaid the daily momentum over here, which went negative, but then neutralized. That says to me that when it goes negative and neutral, it's pretty certain that this daily cycle that I overlaid on here, that says to me that that's probably the bottom right there. And even though I'm expecting pullbacks and for it to chop around, I really don't expect it to get under that level here until sometime in the next cycle that's out over here after we get a failure. But you could see momentum turn negative over here on the 2 hour. And this is a good look at how I can overlay all of the information in here and get a great sense for market condition. If you look here on the market condition indicator, it did finally start to turn down over here, but is a long way from giving us any kind of a signal, and that will take some time to do that. Let's take a look really quickly as I switch over to the NASDAQ right here, and I'll be looking at the same thing really quickly. Right in here, the NASDAQ, let's blow this one up on the weekly. You can see the same type of a pattern right over there. And as it still looks positive and momentum is still strong on the NASDAQ, here you can see a different pattern. Now, what I put in here on the NASDAQ is our cloud formation as it begins to form, and it hit the support perfectly and began to move up. This has a better chance of moving to a new high in January, but again, we're seeing weakness starting to come in these mega caps. So we'll be looking for whether or not it can get up and equal that high. Now that I have an anchor point in here, I can put in the resistance numbers, which I will do. So that is a look at the NASDAQ. Here is your NASDAQ momentum, as you could see, and that actually stayed strong and stayed positive. Option bias indicator staying positive here, and then another upward turn here on the slim ribbon PO. All of those more positive, as you could see, looking at the NASDAQ. Take a look at the Russell. The Russell is a different story. The Russell actually had this kind of a break underneath that support. So you can see where it got support on the NASDAQ. It didn't get support at that level, though it would need to get under 2144 for me to believe it has really turned negative here on the weekly. The problem is, now I want you notice I have this downturn right over here and projecting down over here out into March. Why did I do that? It's because this turned negative. You could see the cycle right in here, either this low or this low, it doesn't matter. We've come down to that level right over here. It's pretty well defined, and this anchor point here is going to give us a sell zone in here when I do the next update on the charts. This gave ground all the way down to that low over here, through this low here, and it says to me that the Russell is done. The probabilities of making a new high are very low. I would say 20-25% based on this pattern. And that's why this is now pointing on the weekly chart to the downside. Look what happened on the momentum here. It went from positive to neutral to negative. The OBI has gone as neutral. There's a bunch of yellow dots right in here. So a very big deterioration in the Russell. The Russell, for the market to do well on positive breath, the Russell has to be in good shape, but Russell actually is in bad shape. So let's just look here at MDY really quickly, which is the mid caps. And you can see in here that the mid cap on the daily chart, beautiful cyclical pattern in there. This actually broke that low right over there. So what that says to me is that this cycle points down, and any rally in here is a failure. I show you that because I want you to see that what's going on in here is that there is a very severe breadth deterioration. The market is not going to be able to go up without the small caps and mid caps. You need to get solid breadth on the upside, and those are the ones that look the worst right now. So I really think that there's a strong message that we're seeing in there, and that this rally that I expect to occur into January, the only one that really looks like it has a chance based on the patterns at a new high is the NASDAQ, but that's really not, would have to be led by the mega caps, which I don't think they've got it in them to do it. So, with the market now up 100 points and the S&P 500, I would not be surprised if this is really all about the amount of the upside move is all about triple witching here today on Friday. So I want to bring in another chart right now that I think is very important to look at, and that is the HYG. It's interesting that we had somebody ask the question about the comparison of the stock market to high yield. And this, I think, is extremely important when you look at this. Now, I'm looking back here to 22, but I can go back further. And what you see in here is that the on the bottom is the S&P 500, and the S&P 500 tracks the high yields very closely. So you had this little rally here in the S&P 500, the little rally here in high yields. And then the shape is almost the same. Look at right over here, the shape almost the same. And then here you can see the shape is not quite the same, though high yields were weaker. The S&P was stronger, and then the markets, again, the same shape, rally, sell-off, rally, sell-off. So the S&P 500 here, as I just showed you, didn't get as low as that cyclical low right here. Look what happens here on the high yields. It has a breakdown. This is really bad. This is a very negative sign as it broke down right over there. It relates to what happened back over here where it broke down right there, where the stock market had a rally, and then as you see right over here, the rally right here, and then began to move down with the high yield bonds. And that is really a very, very negative signal when you look at that. This says to me, and that's why I have this downward path right over here, that this takes you out into May. Now, the next weekly cycle in the stock market really takes you out into June. This is something that I think is an important warning for the stock market. And being that these track so closely, and you have the breakdown right over here, just like you had right over here, and the stock market failure right there, yeah, you get some attempted moves to the upside in here, but this is a very negative message that I see right there. And I thought that was very important to bring to you to see that comparison. I look at that pretty regularly, but that's really something that I think really needs to be paying attention to. If the high yields can overcome that and then start to move above that last peak, well, then I'll be saying that was wrong. I mean, everything got to be okay after that. I have a hard time saying that to you with the stock market at historic valuations and at a period right now where we have disruptors in government that are about to shake and are already shaking things up very significantly. Tariffs are going to be, at first inflationary, but then they're going to be very disinflationary. And there's a lot of reasons to believe that the markets are going to be in a very highly volatile period moving forward. So I wanted to show you that. I thought that was all really important information. I am going to show you the bias heat map in just a second. I think it's really important to look at that because it gives you some great information on all of our indicators. Before I do that, I want you to remember that this is the time for the gift. You can get these non-recurring 3-month memberships and get what I'm going to show you right now. You'll be able to have that on the TOS platform. And you can give the gift to yourself or someone that really loves technical analysis. Matt showed earlier in the show a lot of detail in this. All you have to do is go up, click the holiday specials on the front page, and you'll be able to get these non-recurring offers. And for level 2, we'll send you back a gift of a $20 gift card. Level 3, we're going to send you back a gift of a $50 gift card. And level 4, we'll send you back a gift of a $100 gift card. But the reason I went through that again is because this level 4 is where you're going to get the additional bonus content that I'm going to show you right now coming up. So let's take a look now as we look at the stock market and switch over to the bias heat map. This is the heat map right here, just overlaid on these charts, as you can see. And if you look over here, what I have here is the whole list of different country ETFs. And then our stock market here is right there on the bottom. The order that I put them in is a little different than what Matt did because I have this set up really for a longer term swing trade holding maybe for 1 to 5 weeks in that category. MCI right over there, and you could see the conditions right in here. OBI right there. And the only time you see it orange, then it's likely you're going to get a short-term reversal. This is ILF is now orange. See, it's red, so it's giving you a likelihood of a bounce that will fail is actually what that's saying. Brazil right over here, pretty much the same thing. And the key is, how do these line up in here? And the OBI is giving you a lot of neutral readings right in here. The only thing that's green right across that you can see right over there is still the QQQ. So I just showed you that the NASDAQ is the best chart, and this is picking that up very clearly. I'm going to bring over a little different version of this right now because I really want you to see the value in this. This is a look at the same type of a look, but instead what I'm looking at is the Spider Selects, XLE, XLF, XLV, XLI. And these are in the top weighted, the top 10 weighted in each of those sectors. So I can get an amazing feel for what are the stronger and weaker sectors in here, the stronger and weaker stocks in each of the sectors. I'm just going to scroll down in here so you can get a really good idea right in here. And then I can sort also by clicking up at the top. So you can see in here XLC, XLP, XLY, XLU, all of those in the top 10 weighted stocks in each one. If you have a TOS platform, Thinkorswim, and you want to upload this and have it, you can just get some great information. And we'll help you with all of this. We'll help you set it all up based on what kind of a trader you are, and you'll really love having this. Let's look at the, now I have this set up based on this insensitivity. The MCI is the least sensitive, then the OBI, the askSlim ribbon, and the reversal scout. So we had a reversal today in the market. Let's see which ones gave you an upside reversal. And you can see in here all of the ones right in here that gave you this short-term upside in the reversal scout as it turned up right over there, the slim ribbon turning up right over here in all but target there. So this is kind of the shortest term look right over there. And now when you look all the way across right over here at ACN, I'm sorry, at Broadcom, you can see it's orange right there, and that's telling you that this rebound in here is likely to fail soon in AVGO, in Broadcom, and give you some further pullbacks in there. Let's just sort on the OBI right there, and you can see all of the stocks that are negative on the OBI. Option bias indicator. That's stocks that you want to be on the downside and the negative side. These are all the orange colored ones that you can see right there. And when they're orange and you're all red across, that's telling you these are already overbought in negative conditions I'm sorry, these are oversold in negative conditions and likely to give you a pretty good upside bounce in here when you look at that. So that's just a great way to scroll. And if you're interested in the market condition indicator, you can do that right in here and see which of these 110 stocks we're looking at are positive or negative. Remember that the MCI goes from positive 100 to negative 100. And you can see how many of these are in very seriously negative condition. And when you look at that, those are certainly not stocks you're going to want to buy. And then go back and click symbol and go back into the setup that we had before. So this is fantastic, as you can see, looking at the different groups. And I hope that as I scroll through these right now, you can get a good picture of that. And then you can look at this, slow it down, stop it, and take a look at each of these groups that are in here and the condition right now. So I wanted you to have a good look at this because you could actually put this up right on your own screen and do it any way that you want to. I'm going to go in here and select in the canned groups, the futures, so you can get an idea how this works on futures. It'll work on all of these groups that we have in here. And here it's going to load up all of the futures in there. And you can see coming down across here, all of the futures list. There's a lot in the list, so it's filling up. The black ones are taking a little time, but then you get a good picture in here on the condition in all of the futures. Imagine having this right at your fingertips. I mean, it really does a lot for putting our proprietary indicators right in your view to be able to use that. So I wanted to show that to you. I think it's really important. And again, the stock market right over here, looking at the SPY, the NASDAQ, and the IWM, you can see that it's giving some appearance of negative conditions, except for the NASDAQ, which is still strong. But look at these other countries, how negative they really look and how bad they are. And I don't know that they're going to be able to pick their heads up. Pretty negative. I just did analysis this morning on the EEM, emerging markets, and that's looking pretty bad. Again, here is the stock market SPY for one more look in there as we look at our multiple time frame analysis. And you can see that right there as we're potentially putting in a top here and looking at that daily chart. It really looks to me like it's going to have trouble moving forward.